very good morning. Welcome to the briefing for Tuesday, the 13th of September. And what a difference a day makes, it seems, in terms of the Federal Reserve and where we were yesterday, expecting them to somewhat maintain possibly the commitment that they've had via various different members, whether hawkish or dovish, of really sticking to the party line of being serious about a rate hike in September. And then Brainard, who the market was waiting for last night, came out and essentially stuck to her usual uber dovish ways. Let me first of all start by just going over exactly what it was, her comments that moved the market and what she said. Then we'll look at some of the price activity that followed thereafter. So the Fed governor said that in the presence of uncertainty and the absence of accelerating inflationary pressures, it would be unwise for policy to foreclose on the possibility of making further gains in the labour market. And so, to the extent that the effect on inflation of further gradual tightening in the labour market conditions is likely to be moderate and gradual. And most importantly then, she said the case to tighten policy preemptively is less compelling. Again, just taking a look, firstly, I have marked up a couple of things here on my S&P chart. Got this on a 60-minute candle. And if you remember, we had that huge move on Friday afternoon. This was Friday afternoon. Now, this was important for a couple of reasons. One, Rosengren is a voter, and so was important. And as we got closer towards what we are now in, the blackout period, no Fed members can officially speak now. So Rosengren did capture some attention because continued the hawkish rhetoric. Now, in terms of the comments at that time, that was Rosengren stating that gradual policy tightening is likely to be appropriate. Now, putting this in context, prior to the Friday sell-off, the S&P hadn't fluctuated more than over 1% for something like 2 months. And so once the selling kind of picked up, it really gathered some steam to the downside, and I think people were starting to seriously contemplate that the Fed were being ultra serious about September being a possibility for a rate hike. At that point, when we got to the bottom of the sell-off, in terms of federal funds rate futures, tracking then the probability of a 25 basis point rate cut at the next meeting, that got as high as 30%. And that's pretty much as high as it's been over the last few weeks. What happened then was the market, as we saw yesterday, was very much in wait-and-see mode. Brainard then being ultra important, and it felt like the market was concerned by nothing else apart from what she was going to say. And I think this is another reason why you're seeing such large moves in the market, because if you think about it, irrespective of what asset class you're trading at the moment, the main macro driver undoubtedly is what the Fed will do in the near term with their interest rate policy. And so, irrespective of whether you're looking at gold, the euro, the pound, bunds, T-notes, everyone's looking at Brainard. And then when that kind of situation happens, moves tend to be over-exaggerated then. You tend to get more of a punch in these moves, more conviction. Looking at where these comments were timed as well, it's quite important. So Rosengren, where this arrow is actually pointing, that is exactly when Rosengren comments came out. You can see that was really the spark that ignited the sell-off on Friday. Actually, we were already rallying before Brainard even spoke. If you remember, this coincided here, 2:30, you can see the open of Wall Street. We started to pick up. That's not unusual price activity, I would say. Given the gravity of this sell-off, given the fact we've not had such a large sell-off in such a long time, i.e. 2 months, a little bit of profit taking on that move makes sense. Also, that coincided with a bit of a bounce in crude oil prices from their lows, which we'll go into shortly. Brainard then spoke, prices shot higher. Obviously, the premise now of a hike coming in September is pretty much eradicated. I would say most market pundits, i.e. chief economists at various banks that I've been reading this morning, most people now discounting September, given the comments that she made. At that point, the odds of a hike at the peak of the equity rally last night dropped to 15%, so halved essentially from where we were on Friday. I've seen a bit of a pullback this morning. Pivot is the kind of technical level here in play, just providing a bit of initial near-term support. Again, just like the size of the sell-off, this move that we had on Brainard last night, if you actually mark it up, by no means is it a small move either. It's about 1%, so certainly it's the range, top end of the range that we've had the last 2 months in terms of the size of the move higher. So a little bit of pullback again, possibly a little bit of profit taking given the move, because don't forget the DAX has already traded that move. European traders, professional traders would have stuck around given how important those comments were. So you can see here, they've already traded the move, so to speak, so there's no real need to lift it again this morning. That's the DAX here. That's when she spoke. And you can see the biggest move in a shortest time frame actually happened in European futures. We rallied literally all the way up until the closing price was actually the highest value of the day. So a little bit of a gap lower off that, and a bit of profit taking probably just taking place this morning. Where does that put us then, as indicated by that chart I just showed you? September, 15% probability. Again, that was up at around 30 at the end of last week. December still looks like we could be on the cards for at least one hike this year. Obviously, November percentage is still very small, coinciding with the US election. Most analysts, if not all, see that as very unlikely timing if they were to delay a rate hike. December, most likely thereafter. We're looking at just shy of 50%. And then going out to where it's fully priced in, you're probably, none of these actually going out into the summer, so then you're talking about well into 2017. Quick look at the dollar here, because I think the dollar actually shows quite a good story about tracking the Fed commentary. You can see here, this was Rosengren. You had a big surge in the dollar when the equities came under pressure, so that classic hawkish play in the various US assets. That then came back. We've rallied again. This was yesterday. Rosengren then spoke. That was that big red candle to the downside. We blipped, and now we've recovered a little bit. Actually, then, in terms of the dollar, we've recovered, and even a little bit more so, the entire Brainard move. So when it comes to currency pairs, the move has not been sustained so far. So when looking at whether equities can maintain an upside momentum on the back of the kind of dovish turn, these are the other kind of cross correlations that I'm looking at to see whether that's going to be a strong argument or not. And in terms of the FX markets, any short-term weakness that we're seeing from those comments last night from that Fed official have been decidedly short-lived. We've actually retraced the whole move and more through the Asian session in the open this morning. So the dollar is actually seeing a little bit of strength more recently. We're actually up in the dollar about 0.2% this morning. Let me just switch back to my chart so you can see, as I'm speaking actually, cable just making a concerted effort to get its nose below that pivot level. Psychologically 133 just being targeted next here in cable. You can see in my charts here. Talking about cable actually, while we're on the subject, there's going to be a bit of focus on sterling today. That's because we get inflation readings later on this morning. Having a quick look at the historicals. Remember, when you're trading the CPI data, it's the year-on-year and the core year-on-year that the market focuses on, not the month-on-month. And in the year-on-year, and the prior reading was 0.6%. If you remember, that was the highest number since November of 2014, boosted by the rise in the cost of transportation, alcohol, hotel and restaurants. So quite classic, I guess, seasonally over the summer period in terms of the actual growth of prices in those specific areas. But given the depreciation of the pound post-Brexit, people are looking for how aggressive have prices risen in the wake of that event. So expectations are for a similar type number today, and certainly if you're a cable trader, it's going to be something you need to be watching later on today. A quick look elsewhere, because one thing I wanted to have a quick chat about, because I did have some questions yesterday, was crude oil. Now, what I'm looking at here are really three main key price movements that we've had over the last couple of days. This was the API numbers, which came out last week. I think, let's say roughly a drawdown of 12 million. Prices then shot higher. Then you had the Department of Energy numbers, and given the bar was set so high that, would we see anything like the APIs, which was a pretty phenomenal sized drawdown. In fact, we exceeded that number by a good 2.5 million. So therefore, the drawdown was the second largest on record, and prices again bolted higher. Since then, though, a bit of profit taking. We've come back, and then yesterday we saw another pop in prices. Now, why did this occur? Well, this was already rallying really from the pit open, but at least half of that move can be attributed to the Genscape numbers. Now, I know I spoke about these yesterday. There was a couple of people that were asking me questions about what is Genscape and when does it come out. So Genscape essentially comes out twice a week, a Monday and a Thursday. It's the Monday one that's more important because it's the first look in regards to, well, let me just switch over my chart. Thank you, Paul. So these are the three actual circles here of price activity I was talking about. This was the API, you can see on my charts now. This was the DOE, and this was yesterday, and which half of the move can certainly be attributed to the Genscape number. So Genscape essentially is looking specifically at oil storage tanks at Cushing in Oklahoma, which of course, as you know, crude oil trading hub of particular geographic importance in North America. Now, the reason why the market looks as this is because they use various more advanced technology, infrared cameras, aerial diagnostics, other proprietary measuring techniques that are said to be more accurate measurement in terms of actually looking at stockpiles. One of the things that I was looking at yesterday was that the number came out at a drawdown of 1.2 million. Now, statistically for that data, that is actually a very large drawdown. And when the market was influenced by that one-time effect, which was an incoming storm that was going to potentially affect Northeast America and the Gulf, that kind of front running of that bad weather expectation, although New York evaded that worst of it, it caused a spike in demand as people stocked up on energy products ahead of a potential disruption. And so hence you had such big draws last week and these pops in the API and DOE prices. Likewise then, the market is now looking for signs. Will this continue this week? And if the Cushing number is anything to go by, then certainly many might be looking for similar size type drawdowns in the APIs and the DOEs again this week. Hence the reason why you had such a powerful move on Genscape alone yesterday. This is probably a much more bigger move than we're accustomed to. Just quickly showing you a chart here of Cushing stocks comparison. Now the blue line is the EIA, which is the Department of Energy, the Energy Information Administration. So your weekly Wednesday numbers do include, alongside the headline crude number, they include Cushing. And the Cushing number is what Genscape measure. And you can see here the green line and the blue line, i.e. Genscape and the Department of Energy's readings, track each other fairly well. They're quite well correlated, so hence the reason the market places quite high importance when they see an outlying number in Genscape. And then that then is a trigger point for experienced traders to buy into crude, which is why you had that move higher yesterday. So hopefully that explains a bit more about why those movements were happening. And certainly the move at the time did help equities recover. As we said, even before Brainard spoke, equities were moving higher at the time. Okay, moving on. A couple of other data points just to briefly get you up to speed with. We had some Chinese economic data overnight, and actually was fairly promising. You had the Chinese retail sales report, you can see on my screen here, 10.6%. So matching that of what we saw in June, that actually exceeded expectations. Chinese industrial production as well, showing a continued improvement from the more depressed levels that we're seeing really from May and June. So if the Fed did have any external headwind concerns, I mean, Brexit and China, as we've discussed before, certainly have taken a back seat. Economic data robust in China, and even more so in terms of the UK from a manufacturing and service point of view at the bounce back in the August data. More so, it's the domestic side that has really hurt the US. If you think about it, when you're looking at the Fed comments specifically and what they're telling us, they have used and kept the wording that they would be data dependent. So one must ask themselves, can we be that surprised that Brainard really kept her dovish views? Because ultimately, if anything, the economic data out of the US, the ISM readings, manufacturing, non-manufacturing, non-farm payrolls, if anything, have been deteriorating. And if you're communicating to the market that you are going to be data dependent, well, what the data's told us is that the situation in the US is getting worse, i.e., then it seems unlikely the Fed will make a move next week. That does not mean, though, that December could still well be an opportunity for them, but it seems most likely that they'll buy some time, let's say, to see how the economic situation evolves in the US. Quick look at some other things then on the calendar. As I mentioned, you've got the UK CPI. That's really the next data point of interest. For FX traders, certainly keep an eye on cable. Then later on, you get the ZEW number. Remember, with ZEW, you have a German and a European release. For any of the new guys, the market does not care about the European number. They're only focused on the German number. Now, looking at these data points, again, ZEW, probably the second most important piece of economic information we get out of Germany, specifically after IFO. It's also, I think, going to take quite a bit of attention because economic data from Germany in general has been fairly weak. Factory orders, their PMI data, industrial production have all erred on the side of being weaker than expected. And this is troubling when you talk about it being the powerhouse of Europe and the performance in the wake of Brexit, and also amid heightened political uncertainty that could be just round the corner. Whether you talk about lack of confidence in the ruling government or the, let's say, the pieced together government in Spain, Italy, Renzi under pressure in the autumn of this year as well to deliver on his reforms. There's a lot of uncertainty coming into Europe in a broader political context. If economic data starts to weaken, this could well get more interesting in terms of an ECB play and what they will have to do in terms of making their QE program more powerful. So keep an eye on this data. It's coming out at 10 o'clock. Again, just to recap, it's a measurement of the level of optimism that analysts have about the current economic situation and expected economic developments in the next 6 months. Now, the reason why these data points are so important, such as ZEW and IFO, is that they're a forward-looking measurement of economic developments in what people expect, this is analysts, over the next 6 months. Remember, market and asset values are derived from expectations. This data is telling you what analysts are thinking for the next 6 months. That's why it's such an important figure. I think, if I remember rightly, it was a bit of a surprise last time. It bounced back because I think we had a bout of weakness in the immediate aftermath of Brexit. So let's see whether Germany can get back on track here with these latest readings. So that's coming at 10. Just switching. This was the data here that I'm just showing you with the ZEW. So that was the aftermath in the Brexit. We obviously were at our strongest point we've been in well over a year. Then the unexpected happened. The market had to reevaluate in terms of the outlook over the half-year horizon, and we bounced back last month. It's important to see whether or not this trend can continue and Brexit recovery. Going back to the calendar then, this afternoon, actually very quiet for the US. I would think that today, from a US point of view, it's more going to be about the digestion of what we've heard from Fed members. Remember, no Fed speaker can now hit the news wires given we're in the blackout period, which essentially means that there's no communication with the press up until the actual event itself occurs, and then 24 hours later they can speak again. Now that does not mean that if they wanted to, they could leak a source comment to someone like the Wall Street Journal, the FT, the Bloomberg, and so on and so forth. So I would still remain vigilant, but at this point, there's been certainly a big shift in market expectations that September is now, I would say, highly unlikely that they will raise rates. Otherwise, APIs as per normal, not until later this evening. Speaker-wise, you do have ECB's Draghi speaking at 10 o'clock this morning. Now, this is one of those events where you have to be paying attention to what exactly is the topic, and Draghi, as far as I can tell, is giving an acceptance speech at a conference, therefore unlikely to comment on monetary policy, the economy. That, in combination with the fact that we had the press conference of Draghi only last week, normally he says very, very little different given such close proximity to when he last delivered the press conference. So expecting a complete repeat if he does make any comments in regards to policy. One that could be more interesting though is Lautenschlager, but speaking after European markets close, but possibly something to keep an eye on for any of the live guys looking to trade in the evening. Particularly given if it's a hawk, then it'd be interesting to see how vocal they are in regards to calling against any drastic changes to the QE, certainly moving away from the capital key. Okay guys, that's your morning briefing. Next up then, UK data in half an hour. So enjoy your session. Any questions, put them in the chat. More than happy to help. But enjoy your trading day. Thank you.